Thank you, David. So hold gold as a hedge against rising inflation, like you mentioned. What was once an old adage is now being challenged by a new way of thinking. HODL Bitcoin, hold Bitcoin. So even though Bitcoin remains a debated asset class, it's often called a digital gold, outperforming both the S&P 500 and gold in 2021 for the third year in a row. Of course, we know, as Dom mentioned, this week it's changed course, dropping to a low of $37,728, while gold hit a 2-month high this week. But when it comes to investor psychology, both gold and Bitcoin overlap, which is why I made this lovely Venn diagram. And you can see in the middle, they exist outside of government sponsorship for both of them. Perception is part of their value, and there is a finite supply of both, which is why many are arguing right now that Bitcoin is encroaching on gold's turf. For example, Goldman Sachs analysts predict the cryptocurrency will continue to steal market share, highlighting it already has 20% of the store of value market. But you've got Morgan Stanley analysts that are pointing out that the correlation between gold and Bitcoin, which you see on your screen on the left, has been close to zero over the past 6 months, especially this week. Despite that lack of correlation, new government regulation is expected to bode well for Bitcoin's adoption.
We might have more corporates moving, accepting, buying, selling with Bitcoins. And if we have more corporates, more demand, we will have a higher liquidity, which is going to drive this volatility down.
But that volatility continues, as we know, with the cryptocurrency falling 44% from its 52-week high, contributing to why Wall Street still remains divided on which is the better store of value.